$0. That is what some people put down to start in real estate. Not 5%. Not 3. 0. Every beginner video starts the same way. Save up a huge down payment first. That is not actually the only door in. There are 5 real ways to start. I am going to show you all 5. Some need a small check. Some need almost nothing. One needs no down payment at all. The last one does not even require you to buy a house. I will save that one for the end. And before we are done, I will show you the one catch hiding inside every no money down deal. The part these videos never mention. This is for the total beginner and the person who already knows the basics. Stick around either way. Most guides pick one path and stop. We are covering all 5, so you can see the whole map before you choose. Here is why this actually matters right now. First-time buyers just fell to 21% of the market. 1 in 5. The lowest share ever recorded. That means 4 out of 5 buyers already own something. The door is closing on people who wait. Most beginners freeze at the same spot. They hear 20% down and assume the whole thing is out of reach. So they wait. They save. They watch prices climb faster than their savings account. Here is what should bother you. That 20% number is mostly a myth. It is the down payment for one kind of loan, on one kind of purchase. Not a rule of real estate itself. Believing it is the only path is the actual mistake. Not lacking money. Every year you wait on a myth is a year prices keep moving without you. That is the actual cost of not knowing this. Not a fee. Time. So let's go through the 5 real paths in. How each one actually works, starting with the one that needs the least explaining. Path 1. A government-backed loan. The FHA will back a loan at 3.5% down, per the Consumer Financial Protection Bureau. On a $300,000 house, that is about $10,500. A separate program called Conventional 97 goes lower. 3% down, per the mortgage reports. About $9,000 on that same house. And if you qualify for a VA or USDA loan, the number can be 0. Nearly 90% of VA-backed loans close with no down payment at all, straight from the VA's own site. Same house. 3 completely different price tags to walk in the door. Path 2. House hacking. Here is the trick almost nobody explains. Those same low down payment loans do not only work on a single house. They also work on a small building, 2 to 4 units, as long as you live in one unit yourself. So you buy the building with a beginner's down payment. You live in one unit. Your tenant's rent covers a chunk of your mortgage, sometimes all of it. Say the mortgage runs a bit over $1,000 a month, just as an example. If the other 2 units each rent for $600, that is $1,200 landing before you have paid a cent of your own. You are not just buying a home anymore. You are buying your first rental, and you are living inside it. Path 3. Seller financing. This one skips the bank completely. The seller becomes the lender. You pay them directly, on terms you both agree to. Per Freedom Mortgage, a seller can accept a small down payment, or none at all, if they agree to it. There is no fixed rule. It is negotiated, deal by deal. Why would a seller ever say yes? Sometimes the house is hard to sell through a bank buyer. Sometimes they just want steady monthly income instead of one lump sum. Either way, it is their call. But the seller sets the terms, not a bank. That is worth remembering. We will come back to that. Path 4. Wholesaling. This is the one that does not even require you to buy a house. You put a property under contract at an agreed price. Then, before you ever close, you sell that contract to another buyer for a fee. You never own the house. You never get a mortgage. You never make a down payment. The fee is just the gap. You lock in a price with the owner. You find someone willing to pay more for that same contract. You keep the difference. Per a survey of over 1,000 wholesalers cited by Real Estate Skills, the average fee runs around $13,000 a deal. Roughly the price of a decent used car, for one signed paper. Real estate without ever owning real estate. Digging up mechanisms like this, instead of repeating the rounded-off version everyone else does, is genuinely the whole point of this channel. Subscribing means you catch the next one early. And Path 5, the smallest door of all. You do not have to buy property to invest in property. A REIT is a company that owns real estate for you. Per NerdWallet, you can buy a share of one through a normal brokerage account. The price of a single share. No house, no tenant, no down payment at all. REITs are also required to pay out most of what they earn. At least 90% of their income goes back to investors as dividends, per NerdWallet. You get paid the way a landlord does, without ever fixing a leaky faucet. It will not make you a landlord. But it is a real, legal way to own a slice of real estate starting today. Now the catch. Because 2 of those 5 paths deserve a serious warning. Wholesaling's legal rules are not the same everywhere. Some states barely regulate it. Others do, hard. Per Real Estate Skills and Resimply, South Carolina requires a license just to publicly market a contracted property. Pennsylvania's own law now treats it as licensed brokerage. Illinois caps an unlicensed wholesaler at 1 deal a year. So wholesaling is legal is true and false at the same time. It depends entirely on your state. Check your own state's rule before you try it, not after. Second warning. This is the catch I promised you, and it applies to every no money down path, not just wholesaling. Putting less down means you are borrowing more. Say a home drops 5% in value the year after you buy it, with 0 down. Your loan does not shrink along with it. You can suddenly owe more than the house is worth, faster than a buyer who put real money down. Less skin in the game cuts both ways. It lowers your starting cost. It also raises your risk if things go wrong. Third, buying a home is not automatically a win, even done right. Per a Bankrate survey, 45% of homeowners report at least one regret about their purchase. Almost a coin flip. The top one, by far, maintenance and hidden costs ran higher than expected. Second, the home turned out too small. Third, the monthly payment bit harder than planned. None of those are about the down payment. They are about what happens after you already have the keys. And to be completely direct about what this is general information about how these paths work. It is not legal or investment advice for your specific deal. Real estate law varies heavily by state, and a program you qualify for depends on your own credit, income, and location. This channel has nothing to sell you, and no referral fee riding on which path you pick. So here is exactly what to do this week. 5 things. None of them require a big check. 1. Check your own credit score. 580 is roughly the line for the cheapest FHA rate, per mortgage industry reporting on HUD's own guidelines. Knowing your number tells you which doors are already open. 2. Get pre-approved by one lender, even if you are months away. It is free. It turns 20% down from a scary rumor into your actual, personal number, based on your real income and your real credit. 3. If house hacking interests you, ask a lender specifically about owner-occupant loans on 2 to 4 unit buildings. Not every loan officer brings this up unprompted. You have to ask for it by name. If wholesaling interests you instead, search your own state plus wholesaling real estate laws before you sign anything. 5 minutes now saves a real legal headache later. 4. Before you count on rental income from anyone, build in a gap. The national rental vacancy rate runs about 7% per Census Bureau data. That is roughly 1 month a year where a unit sits empty. Plan your numbers around that, not around a full 12 months of rent. 5. Keep a real repair reserve, separate from your down payment. Redfin recommends new landlords keep at least $2,000 set aside. About 1 broken water heater. Do not let a single repair wipe out your first month. And if none of the first 4 feel ready yet, open a brokerage account and buy exactly 1 REIT share this week. It costs less than a dinner out. It will not make you a real estate expert overnight. But it is a real transaction, and the fastest, cheapest way to feel how this asset class actually moves before you risk more. So, quickly, the 5 doors in. A government-backed loan, as low as 0 to 3.5% down. House hacking, where tenants help cover your mortgage. Seller financing, where you skip the bank. Wholesaling, where you never own the house at all. And REITs, where you buy a slice of real estate for the price of 1 share. 5 very different amounts of cash to start. All of them real. None of them a shortcut around the actual risk. Knowing every real door in helps more than knowing just the one your uncle used. That is useful before you make your first move, not after. If that is what you want before you commit real money, subscribing is the whole ask. That is what this channel is for. And if you have already used one of these 5 paths, tell me which one in the comments. It genuinely helps the next beginner reading through them, more than another generic list ever could. See you in the next one.